Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and we're recording this episode for GoodCrowd.info. We're talking today with Andrew Jewett, who is the co-CEO of Aperture, and we're talking about his new ICO. You don't want to miss this episode.
Welcome to Your Mark on the World, bringing you another changemaker with champion of social good, Devin D. Thorpe.
This episode is made possible via the support of our sponsors, including Johnson & Johnson's Caring Crowd. Andrew, welcome to the show.
Thanks so much for having me. I really appreciate it.
Andrew, you're doing some remarkable things. I know you've got the best and most noble of intentions in your business and trying to help improve the world and make neighborhoods cleaner and safer by helping people to invest in property and fix it up and get it back on the market where a family can come live in it again. Really important part of the economy, and we're grateful that you're doing that. But tell us a little bit about the business and how a new cryptocurrency might fit into it.
Yeah, so you're exactly right. And by the way, we view this as a socially responsible company, one we want to be able to provide a benefit to every neighborhood in which we operate. So basically what Aperture does is two main things. We're utilizing data and technology to acquire, rehabilitate, and sell to end users, like you said, usually small families or move up home buyers. And we are buying distressed homes. So, we've got a bunch of properties right now that had been condemned for one purpose or another, boarded up, a nuisance to the community. We've come in, we've bought those houses, and we're going to be selling those shortly. And that's our business model, right? That's what we do. The other avenue of the business is we lend to other investors who do that. So hopefully by virtue of us giving them additional capital, we can perform the same social good, just not at our, in our own proprietary method. So two avenues with which we like to, rehabilitate, redevelop communities and really kind of give back to the neighborhoods in which we operate. But the way the cryptocurrency is going to work is, we are, as a real estate company, we're limited by the amount of capital that we have to invest, right? If we're buying properties, we're not buying t-shirts. So it's very expensive. And so we saw the crypto world as a way to fund the growth of our existing company and the existing platform and the sheer number of properties with which we can perform that social good. Albeit I will say we do have a profit motive in mind, but we do also want to give back to those communities. But it allows us to expand that and allows people from across the world, not necessarily just in the U.S., to invest in the platform essentially.
As you think about this coin, you've done something, if I understand correctly. Now you correct me if I don't, but because this is important. But I think you have set up your coin to work very much like a security, to actually give people an interest in a financial stake in the enterprise. This isn't just a coin that represents a utility token that will serve some purpose out there. This is actually an investment. Am I understanding correctly?
You're exactly right. My background is, obviously part of the senior management team of the largest fix and flip operator before we founded Aperture. But even before that, I was an investment banker. And when we saw the coin market, we said, a lot of these things that people are selling are securities. And a lot of people are going to get in trouble for that. And I think we're starting to see the SEC come down on some of these bad actors. And, not necessarily just the bad actors, but the people who didn't know any better. And so we wanted to provide the crypto community with a way to tokenize assets. And we believe this is going to be the platform for that on a go-forward basis. But you're right, this is a security. It essentially, each token, excuse me, represents a fractionalized ownership of the portfolio of properties and loans that we own.
So the coin that you issued this time with this offering will allow you to acquire a portfolio of property. Since it's largely flipping homes, you'll churn through that fairly quickly. Will this be an evergreen fund so that the money goes back in?
Yep.
And so that it's a perpetual thing. So
Exactly.
kind of perpetual motion here.
Yeah, and that was one of the benefits we wanted to provide to token holders, was by reinvesting those monies in those profits for the token holders, that there's a natural kind of call it upward mobility or upward pressure on price, right? So instead of the only upward pressure on price being its scarcity and somebody else's interpretation of value, this has actual real estate behind it, and it's an ever-growing pot of real estate. So the per asset, per coin, share of the assets should increase over time via that. So we think it's a really appealing alternative to some of the more speculative cryptocurrencies out there in the market.
It is interesting that you have gone sort of all in on the securities strategy. One last question about this. One last question. Who am I kidding? I've got 42 more questions. We'll see how many of them we can get through, Andrew. But does the fund that you're raising today with this new coin, does it anticipate the issuance of new coins going forward in sort of a secondary offering on this particular fund with this particular coin?
It does, and that's been a challenge, honestly, to explain to the crypto community.
That's sort of a
yeah,
crypto world, right?
But the way our coin works is because there's asset backing and there's cash and properties and loans behind the value of the coin. Issuing more coins only adds more cash and properties and money into the ecosystem, which are more properties and loans that can make more money. So it's actually, not only is it non-dilutive, like I actually could make an argument that it's beneficial if we issue more coins over time, because we're adding to that income producing potential, right?
Yeah, it's a very traditional way to think about and approach a securities offering.
Right.
This is a new way of thinking about a coin offering. So it's very intriguing. Now let's talk a little bit about the regulation. I believe you're offering this under Reg D 506C, which is essentially a public offering open only to accredited investors. Am I remembering right?
You're exactly right. Reg D in the U.S. and then Reg S outside of the U.S.
Okay, and is most of the money coming from U.S. investors or international investors?
I don't have the breakdown right now. I think it's probably a little bit more U.S. based than international at this point, but we're in private sale mode, so it's still a little bit fluid. We're not even close to being done yet.
Okay. So how much are you hoping to raise?
We're looking for $50 million. And look, we could spend 200 right now. We see so much opportunity in this market right now. And we see tremendous potential for our platform, and we built it. We built this to be a $1 billion plus platform. That's what we've managed before. We kind of have all the relationships of that mid to large scale company, but excuse me, we want to be thoughtful and well timed and have sustainable growth, and not just raise a ton of money, grow out of control, and then have issues down the line. This is our livelihood. This is our business. This is what we want to do.
Where are you seeing the opportunities in this real estate market? It seems like we've had 7 or 8 years of sort of lower left, upper right after the bottom of the Great Recession. Where are there buying opportunities in this market?
So that's the beauty of what our system does and our tools do, is that we find the best properties for investment purposes. And I probably can't say more than that. My partner will kill me because that's our special sauce. But we like to think that we have access to distressed homes across the country. We're very specific about how we selected the markets. We're trying to stay away from some of the markets that had huge rises and huge falls during the last crash, because I think in markets like Los Angeles, San Francisco, New York, you're pushing peak levels from 07, 08, and we want to kind of stay away from some of those much more volatile markets. So we find opportunities through our systems, and then they're value-added repairs, right? We aren't afraid of getting into the house that needs a lot of work because we think there's value add in those repairs that we perform.
Well, if you've got the capital to fix it up, you don't have the problem that the prior owner probably did of not having capital to take care of the property.
Exactly.
But that kind of is a nice segue into a challenge I want to make. And I definitely don't want to be a jerk here, but we want to think through somewhat skeptically, at least, to get at the bottom of the social purpose and social mission.
Sure.
Clearly, when you take a home that is in rough shape and it's owned by a bank or other investor that never did live there, and you buy it and fix it up, and a family buys it or rents it that can afford it and will take care of it, and it's a huge improvement to the neighborhood over sitting empty and decaying.
Sure.
So that premise we get, but there is an issue in the whole economic system in the United States that we have so many homes ending up in foreclosure, and some might question whether your mere existence facilitates that model in some way. How do you respond to that horrible criticism?
Look, I think it's a somewhat unfortunate nature of the system that's been built this way. I think there's a lot of opportunity for change in that regard, and I think that probably starts with HUD and Fannie Freddie and kind of how they oversee the lending practices in this country. I think I saw it firsthand as somebody who was in the middle of it on Wall Street in 06, 07, 08. Lending got way out of control and people took on way more risk. And I think you're right. We do benefit from some of that on the back end, but there's always situations where there's death, divorce, bankruptcies, just bad situations. And I think what we don't want to do is we don't want to exacerbate those problems any further. We feel like, yes, it was a bad situation and we never ever want to see that. But us coming in and providing an outlet to the bank who's otherwise doesn't care and they want to get their money out over X number period of time, we feel like we provide a service on the back end and provide a good to the community. And I will say another piece of what we do is I was actually in St. Louis yesterday meeting with a bunch of veterans programs. So we're putting together a program where we can hopefully, if it works, and then if we can get this off the ground, offer, I apologize, there's fire engines in the background. If you can hear me, I'm in New York, as is life in New York, but offering veterans the ability to buy our homes, or offering veterans the ability to perform some of the rehabs on our homes and giving them jobs if they come back from service. So we want to make the best of a bad situation, right? And it's an unfortunate one that is kind of exacerbated by the current economic times and some of the heartaches that people have gone through and lived through. But we like to give back where we can, because we are capitalizing on some of those unfortunate situations. So we strive to make the best out of those bad situations on the back end.
Well, these are important issues, and there's no question that each individual neighborhood benefits when you or anyone else comes in and invests and cleans up a home and makes it habitable for someone that can buy it or rent it affordably and fairly. But this system we do have this weird system that sometimes penalizes people, but it seems like every time you do that and you help the neighbors with the by increasing value of the homes in the neighborhood, it tends to discourage the problem that leads to your opportunity.
Right.
You work yourselves out of the opportunity, it seems.
Yeah, and the other piece of it is that there's right now in the U.S. there's a huge lack of affordable housing. Just the mere shortage is driving up prices just from supply and demand econ 101 perspective. So if we can come in and buy a house that's in an affordable neighborhood, and those are the neighborhoods that we operate in, that's providing a service to the community as well.
Sure.
And I'll go back. One thing I didn't touch on is I think it's really important from an educational perspective. I think there needs to be a program that teaches people how to deal with their money, how to handle a mortgage, how to pay your taxes. And we've part of the program with the veteran services is we want to provide some service in that and saying just like, hey, here's how a mortgage works. This is what you need to do. You need to set up all these controls and process and make sure that you have the money in the account every month because it's coming up. And if it doesn't, then there's consequences. So, I think education is a huge piece of it, and we want to provide some services to the community in that method as well.
As you mentioned, though, that a lot of the burden for this rests on Fannie, Freddie, HUD, and the VA to the extent that they're guaranteeing mortgages as well. But there is an inherent conflict between their mission to make homeownership affordable to people with relatively low assets and the security of that mortgage from a lender standpoint, right? If you make a loan to someone with 3%, 5% down, I think if you're a veteran, you can get it with nothing down. It's difficult for the market to expect there are going to be no foreclosures resulting from those mortgages. Right. And so there's a natural tension there. I guess part of what happens from that natural tension is there's an opportunity created for you.
Yeah, and I think you're exactly right. That natural conflict is driven by their mission, but also the level of risk is not appropriate with the mission, right? It should start earlier, and I think it all goes back to education, right? People need to be educated on saving for a house. If you want to buy a house, you need to save for that down payment, and 3% probably isn't the right number. 0%, oh God, I mean, just from a risk perspective, that seems scary to me. I applaud the program because it helps veterans, and I think for the most part, and the vast majority of people it works for. It's a huge benefit, but there, with that level of risk comes that level of unfortunate consequences.
Yeah. Well, Andrew, I really am grateful that you take the time today. You had a really stellar career. I wonder if you would just share what is the most important lesson you've learned over your career?
Be a straight shooter. Be honest and be truthful. I've seen a lot of people do a lot of bad things in my career. Having been in mortgages on Wall Street in 05, 06, 07 era, you get to know who the good guys are pretty quickly. And I think it's people, I like to think that I'm a good guy and that I do what I say I'm going to do. But being honest and a good partner to any business partner that you're in is incredibly helpful. And I think it goes throughout life, not just business. Doing good by the people that you're surrounded by and that you meet, and being a nice person, it goes miles.
Andrew, why are you so focused on this particular fix and flip strategy for solving the social problems you see there?
I think it comes down to real estate is one of the most secure things out there. And the more of it that we can put in the hands of people who are going to take care of it and make it, as an investment, as a family, that's going to help our society grow. I think we've seen a massive swing from the saving and buying a home mentality to the renting and spending all of your paycheck every month mentality. And I think that's dangerous as a society. I think we need to be building assets more than we need to be spending money on frivolous things every month. So the more that we can put those types of houses into the hands of young families and help, there's all sorts of studies of children who live in homes do better than maybe children who live in apartments. It's just that family community and the community around any house that's been foreclosed on. It's a blight on the neighborhood, and it causes issues. I mean, I can't tell you how many houses we've had that have had boarded up windows and either drugs going on in there or kids throwing parties and just kind of general mischief. Like we want to solve that and help alleviate some of those problems.
Andrew, what is your superpower?
I'm a pretty good cook. My wife loves my cooking, so I do all the cooking at home. But that's I think my one superpower.
I love it. I'm guessing that didn't make it into your offering memorandum. But
no. But if people want to give us enough money, I'll cook. They can come to my house and I'll cook them a nice meal.
Fantastic. Well, Andrew, thank you very much for joining us today. Before you go, will you take just a minute and tell people how they can learn more about Aperture, Property Coin, and how they can connect with you personally?
Yeah, sure. So it's our website for Property Coin is just propertycoin.re, RE for real estate, and then Aperture is aperture.re. My email is, the general info at Aperture or info at propertycoin.re. Will get an email to me and I'll get back to you. But we're super open to just talking with the community, and if there's people who want to partner on any either veterans programs or nonprofit programs that we can help out in the communities in which we operate, we're always looking for those partnerships. So Devin, I really appreciate you having me on. This has been fantastic. I love your show, and this is such an honor.
Thank you, Andrew. It's an honor to have you, and we wish you every success in your new enterprise.
Thanks so much.
All righty. Let's do some good.
At Caring Crowd, we believe everyone has the power to make a difference. Through our crowdfunding platform for community health, we empower passionate people to drive real change. Whether you work for a nonprofit organization, volunteer, or want to get involved for the first time, you can post a campaign on Caring Crowd. Join us, because caring is where change begins.
Thank you for listening. This podcast is available at youtube.com/Devin Thorpe. Subscribe to this podcast on Stitcher or iTunes by searching for Your Mark on the World. Every weekday, Devin hosts a CEO, celebrity, entrepreneur, or other changemaker here on the Your Mark on the World show to inspire and prepare you to make your mark. Devin is a champion of social good, writing about, advocating for, and advising people who are doing good. He is a Forbes contributor who is a recognized thought leader in social entrepreneurship, impact investing, and crowdfunding. To book Devin as a speaker, visit devinthorpe.com.